Good morning, everybody. It's Wednesday, October 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up a penny and a half at 402 3/4. November soybeans were up 6.5 at 997.5, and December Chicago wheat was down 3.5 at 576. This morning, we had a number of export sales announcements. 1.6 million metric tons of corn to Mexico. Out of that total, 1,043,940 was for 24. 579,120 was for 25. Also announced 332,000 metric tons of corn to unknown destinations for 24, and 175,000 metric tons of soybeans to unknown also for 24. We are through 11 of 23 settlements on the harvest price discovery period for crop insurance. Corn is currently sitting at 420.5, while beans are at 1024. Yesterday afternoon, crop progress was released. Corn came back 47% harvested. That was versus 30% a week ago, and well ahead of the average of 39%. So making good progress there on the corn side. Soybeans, same story, 67% harvested. That's up 20% from last week, and well above the average of 51%. Winter wheat plantings falling just a touch behind the average. There are 64% planted. That's versus 51% last week, and 66% for the average there as well. Yesterday's NOPA numbers shattered the estimates. 177.32 was NOPA. They were looking for 170.3, so a real strong, solid crush number. And that will wrap up the news this morning. Lots to get through here, guys. We also had an online question come through, maybe to kick off the show here, guys, and then we can get into kind of what's shaking out here. But a question comes from one of our viewers. If Chinese relations implode, I'm guessing they're assuming this after post-election, and we lose any hope of corn business, is our markets left with basically carbon capturing as the next big industry to make corn feel necessary for the U.S. grower? Justin, maybe throw us a few thoughts here to start the morning off, and we'll throw it around the room.
Yeah, thanks, Dan. Yeah, I guess just to that question, I do think, China aside, even that, we're going to have to continue to develop our domestic demand for both corn and beans. And I think we are seeing that. We've talked about this a lot. The soybean crushing facilities that continue to go up, to help meet renewable biodiesel demand. Obviously, we've talked about loopholes that need to be fixed with used cooking oil and various competing feedstocks that are coming into the U.S. That needs to be fixed. But certainly we're seeing record crush continue, and we'll continue to see that happen. I think where aviation fuel ends up going as it relates to corn demand, I think will be important. So we're still seeing record demand for biofuels, but the question relating to China, China hasn't been a large corn importer for a couple of years now. So they're going to be dependent on what their domestic demand is in general. And I think the bigger question is just competing against South America and Ukraine as far as corn demand is concerned, is the bigger obstacle in general. So yeah, in the short run, having a trade war, those kinds of things obviously hurt us. Ultimately, though, in the long run, it's going to be, competing against these cheaper, call it places that can, grow the crops cheaper than we can, which has been an ongoing challenge with South America, especially when you're looking at, the fact that they can double crop corn behind a bean crop, right? It's just really hard to compete with that. They have such a large area that can plant 2 or 3 crops in a year on the same acre, makes it really hard to compete cost-wise. So I think that's a bigger thing long-term than just, looking at a trade war with China. If that is what we end up, escalating here, it's just finding more things that we can use domestically. I think we've seen it where we're kind of the, last origin for exports, and that's just kind of how we're structured. we are competing against our own biofuel sector as well. So it makes it hard to be super competitive on exports. Now, obviously, we're there right now. So we're in a sweet spot right now. It's just that window's gets tighter every year. We have to sell a lot of that, in a 2 or 3 month period instead of 6 months. So we saw some fantastic sales today. We, announced 2 million tons of corn, as we got close to that $4 level. So, we're very competitive for the next 2 months, it looks like, compared to, Ukraine, South America. So hopefully we continue to do, really good sales on these big breaks. We're entering the second half of harvest, which, I am concerned about, just general harvest pressure like we've seen. We've been talking about it. It's nice to see really good demand meet these big sell-offs. So hopefully we can find some balance in here as we hit the second half of harvest, where we're going to have, bushels that just have to be sold off the combine, kind of as we fill up that storage space. And we have low river levels, all those things we talked about. Dustin brought it up before the show, but Mexico makes a lot of sense. They, can import a lot via rail. So we're probably pretty competitive in that market. So hopefully we continue to see that kind of demand.
And Dustin, what's on your mind this morning?
Oh yeah, I think the spread narrowing makes sense after seeing these sales. It's 50 million bushels, over 10,000 contracts in a single day announced. So that for that to be a spread issue, I think we're starting to see basis weaken or stay weak in the east and along the river. We have to remember that these contracts are geared to go downriver. So, I think most of this is going to go rail, and barge freight's increasing because our river levels are still forecast to get, like, now that we're talking about minus 9.9 feet by October 30th in Memphis. It's going to be an interesting thing that happens when we get spreads as narrow as we just got them to be. What happens as we get to the later part of this contract without much more rain in the upper basin. Otherwise, we're after today, we'll be past that halfway point for the fall crop insurance price, and hearing reports of, like, just less appeal from the commercial side, less appeal for growers to do some sort of deferred pricing mechanism, whether that's, paying for commercial storage or DP, or putting it on a basis only contract that's unpriced. We're hearing just anecdotally from commercials that, growers are quicker to sell this year. And it would make sense to us hearing that, which is, that a lot of people got caught, doing that last year. And then the market fell sharply into JFM when, that money was needed to, pay down the loan prior to loan renewal season. So if people are getting ahead of it this year and selling sooner, perhaps that just puts a little bit more emphasis on why we're seeing harvest pressure right now, and that we could continue to see some harvest pressure, just at that gut slot of harvest, because we're getting traditional selling rather than non-traditional DP and basis only contract holding. So I don't know. It's something just to kind of note. I don't know how widespread that is. Just we heard that yesterday and thought I'd share that. But to see the market sell off yesterday and the last couple of days, led by the back end of the market, not December, and then find all this business today, it's kind of it's a weird thing. It's spreads and flat price have been positively correlated, meaning spreads go up when price goes up and spreads go down when price goes down. We've not seen the last couple of days, and maybe there's a chance for some reversion here, just looking at that river level.
And we noted it yesterday. We have seen a pretty significant jump in open interest for corn and beans. We were up another 24,000 in corn and almost 20,000 in beans too. So, the last couple of sessions, just a continue increase there as well. Yeah,
that would make sense. That coincide with, the fact that we're seeing fresh buying and we're seeing fresh selling. But we talked about both sides of that transaction. In the last two commitment or traders reports, we've seen huge increases in the open interest on the commercial side. We've seen reductions of open interest on the managed money side. So, commercial activity is growing as we're realizing this record crop, and funds have gotten out of their shorts. Perhaps they will build the short position again, right? If there's a reason to. The dollar continues to rise. That's, currencies are certainly supporting this too. a re-entry back into the short side of the market with the recent dollar strength and Brazilian real weakness. That's another thing that might help explain this. Why November 25 actually led a lot of the move down. Some of these big bear market days for beans, led by Nov 25 beans, could be related to the fact that all the way out the curve, the falling real supports their price compared to our price. So that could explain it too.
Yeah, Justin, yesterday we had a viewer from Brazil that commented on meal quite extensively. Was really interested in meal consumption, and I guess my takeaway was that he felt that meal was overvalued here. But we did see a huge crush number yesterday. They were expecting a big one, and they got an even bigger one. But maybe just a few thoughts on that market, Justin.
Yeah, I mean, I think it's impressive when you look at the fact that we crushed 7 million more beans than the average guess, and oil stocks were lower than the average guess. So implied oil demand's skyrocketing. I mean, we're close to being under 1 billion pounds. Now that seasonally will start to pick up as crush increases. But we've broken record. We've talked about this for a long time, and this kind of goes into the earlier question about domestic demand and biofuels. I mean, we're seeing record crush numbers month over month, especially when you look at versus previous years, and oil demand's huge. And that's with these giant loopholes. Billions of pounds of foreign feedstocks being brought in for taxpayers here to pay the tax credit to go green. So huge loopholes, and still giant demand. So as that gets ironed out, it's pretty friendly, I think, long term. Call it medium long term, and obviously we're constantly competing against South America increasing their soybean production. But when you relate it to meal, eventually when you have enough beans to crush, which I think we're going to have this year, meal's going to be a problem. Maybe it's 2 months down the road, 6 months, 18 months. That's always the tricky part. Luckily we had some hangover South American problems with Argentina, which is a huge crusher globally, a huge meal and oil exporter. They ran into issues. It's been over a year, 12, 18 months ago. So we benefited from huge exports of soybean meal. But as the rest of the world catches up, in Argentina specifically, back to meal exports, we're going to eventually have a problem where we're going to have to figure out how to get rid of excess meal, especially something that's not very storable. You can store oil, you can store corn, beans for a long time. Meal's not the same. In South America, they pelletize it, right? So they make it more storable, but still it's not anything like just storing a dry commodity like corn, beans, or a liquid like oil. So, as demand for biofuels domestically goes up, you have more ethanol demand, which creates DDGs, right? It creates DDGs as a byproduct, which directly competes with soybean meal, and we're going to have renewable diesel, right? So we're going to see crush of corn and beans continue to increase, and the feedstocks being meal and DDGs that are competing against each other. We're going to have to find ways to export it or use it more domestically. So it's an interesting question. I tend to agree that we're going to see the higher end of meal versus oil. I think we've just experienced it. Fast forward in sometime in the next year to 18 months, I would expect oil share to continue to increase as a percentage of the crush value.
Very good.
Does that answer that question?
Yeah, no, that's really good. That's really good. And our friends from Bourbon Brown are on here this morning. They appreciate the show. It's a great show. Congrats. So we appreciate them tuning in. One question that he did have this morning, just relative to price action in soybeans. I know we've talked about, we saw a rally. What I guess, we shy away from direct recommendations, obviously, here on the show, but just overall price action. And, I know it's kind of a loaded question, Justin, but just, beans at this value right now here today with what we know. I mean, what's your guiding opinion?
Well, we rallied $1.15 and we broke 90 cents.
Mm-hmm.
I think the rally was great and a good opportunity in both corn and beans to sell. We had I think a classic bear market rally going into harvest, and then harvest pressure came in, and the yields are too good to hold that rally. So we rallied back to the 100-day moving averages in both commodities. That got met with a huge change of ownership from a big short fund position that they covered into new farmer selling. So I think the way everything's worked so far makes a lot of sense, especially when you add in the timing of crop insurance eroding and expiring, where fresh protection needed to be put in place for a lot of growers, and meaning that sales or physical sales need to replace crop insurance as that's expired, and then the realization that yields have been bigger than a lot of people thought, or at least they're realizing those big yields. So more comfort in selling, with a flat price rally. So beans, I'd say fairly priced for what we know now. If South America rains continue to come down, and it looks like they are, CONAB came out with, 166 million ton bean estimate, which is 20 million, again, bigger than last year, basically. So the global soybean picture is just not exciting in general. So, I think that's going to be a headwind for beans, short of a South American weather problem. So, $10, psychologically is an area that people are going to try to buy here. But there's nothing special about it. I wouldn't be surprised with $9 beans, to be honest. Corn, I think, is kind of maybe the opposite as soybeans, meaning that globally pretty friendly balance sheets. Dustin talked about this extensively. If you take out China from the equation, which you really should, because China's just, I don't know how you can trust any number, imports, exports, or production that we're using for those. So if you take that out of the equation, we're pretty tight globally. We're just going to have an oversupply of U.S. Right now, right? So we're going to have call it a 2 billion carry out. I still think there's some risk that yields increase a little bit in the U.S., but we're going to be fine tuning it here. We're seeing good demand at these levels. We're oversupplied right now. That's why we've talked about spreads as a big risk or basis in the short run. Once you get past, let's call it, we'll get into first quarter of next year. Not super bearish corn by any means. I know the question was originally with beans. I think beans are the softest part of the equation, just looking at a global balance sheet. Not meaning we can't rally or anything like that, but the fundamentals right now, I don't think support a large rally by any means in soybean complex.
Very good. Rylan, we got just came into the open here, but a few thoughts on cattle as we start the day.
Yeah, we had a pretty rough finish yesterday. It's been about time, I think, for some kind of real setback. So we finally got one. There's may be a multitude of reasons for it, but it just seemed like everything was down pretty hard yesterday. So I don't know if there was some big liquidation or anything like that, just kind of around the ag sector in general. But, we made new highs in the beef yesterday, 316.83 for choice, up 350. Open interest was back up at 352. So maybe we're actually seeing some hedge pressure here start to mount in the deferred contracts. Overall, there were 10 new deliveries against October going to West Point, Nebraska. So that's a total of 20 now. So it seems like we're seeing that convergence now just on the October board. And so the question really is, what's the right basis for Dees at this point? So I think naturally, you get up to those levels, and in general, the trade has been long. The trend has been good. We fell right down to the 25-day moving or 20-day moving average in December. So we're going to see if those numbers can hold. It'll be a really good sign. I think if they do, maybe a little bit of concern if we pop below there for a minute, but we'll see. Overall, just waiting for the other shoe to drop with cash right now. The asking prices are like 189, 190-ish in the South. So we'll see if they get them, but it just seems the board's a little reluctant just to get to that price just yet. So we'll just have kind of a wait and see right now to see what kind of indications we see from that cash market.
Very good. Appreciate the update. Just came into the open here. We got December corn up 2.5 now at 403 3/4. November soybeans are up 7, 997 3/4. and December Chicago wheat is up to at 581.5. A couple of things to point out here. We will have a special guest on tomorrow. We got a grower from the Western Corn Belt that'll be on to talk about harvest and yields and all things that are going on in the West. So be sure to tune in. That should be an exciting segment that we're having tomorrow morning. Also, export sales are pushed back to Friday because of Monday's holiday. So there will be no sales reported there tomorrow, but we will have that for you on Friday. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything AgYield. And once again, we appreciate everybody that takes the time to start their morning with us. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.